Thanks everyone for joining us on a pretty slow and boring week in crypto. We're definitely excited to have this conversation today. So I know this has been announced in tweets, but yeah, today DeFi Pulse is hosting a conversation with Caps from NFTX and Christoph from Scalara about where DeFi and NFTs meet. Obviously DeFi and NFTs have overlap in that they're both some of crypto's obvious early use cases, but we're only now seeing projects emerge that blend the two. And from my perspective, NFTX is on the absolute forefront of that, so it's definitely great to have Caps here. Um, I'll have a few questions to kind of get our conversation started. And then later on, people in the audience will be able to come up and have the opportunity to speak on the Twitter stage and ask some questions to our guests. Um, so yeah, we'll start with intros. Caps, why don't you tell us a little bit about yourself, a little bit about NFTX and what you do there?
Hey, thanks for having me on. And yeah, interesting you say a slow and boring week. I think all the markets anyway would probably slightly disagree there. It's been quite a volatile and exciting, particularly as we'll come on.
I I have an issue where I'm a little too obtuse when I'm trying to be funny. It's obviously a pretty crazy week. If anything, we can give people a break from it with you guys and all you're doing to execute.
Yeah, absolutely. I mean, NFTX, we do enjoy the volatility as well. So yeah, all very, very good stuff. So yeah, just really, really quick background on me. Got into Bitcoin quite a while ago, back in 2011. I was playing far too much online poker, and I think it was Black Friday back then when the US decided to ban all online poker rooms. That I was suddenly kind of thrown into the world of Bitcoin, as people at the time were kind of using it as a sort of play money back then, and no one saw it as like a future digital gold or anything like that. And it was just sort of messing around with Bitcoin and playing there. So ended up kind of going into like Web2 businesses based around Bitcoin. Did that for a few years, and then in 2016 moved into Ethereum, and again kind of kept in the Web2 world. Then there wasn't much you could do on Web3 back in 2016, and sort of worked around crypto for a long time. And it wasn't until 2020 with DeFi summer and everything leading up to that I kind of really took an interest in all the kind of opportunities that were available on Ethereum. And yeah, after like heavy kind of experimentation in DeFi summer and getting familiar with all the apps, I stumbled across NFTX in like, I think it was February 2021. And it was like the perfect mix because like I have a soft spot in my heart for NFTs because I was always into like in-game assets and like on the Steam marketplace and that kind of thing, and was obviously enjoying DeFi. And to see NFTX, which was at the time creating NFT index tokens, that seemed like the perfect kind of like mix of DeFi and NFTs. And I started, I think at the time I minted a bunch of hash masks and was farming them on Onsen and Sushi, and just kind of getting familiar with what was maybe possible in this industry. And so yeah, ended up in the Discord server of NFTX. Was fortunate enough to stumble across Scott Lewis, who was there and had spoken to previously on DeFi Pulse as well. And amazingly, sort of very organically, found myself through Scott coming on as product lead at NFTX. And from there, we kind of took it from this NFT index token project through to a sort of a liquidity protocol, more kind of broadly speaking, and all the kind of applications that are now being built on top of there. So yeah, it's been quite a wild, like very condensed year, I think, of a lot of building and excitement.
That's awesome. And hold that thought on NFT index token because we're gonna obviously come back around to that. It's interesting you say the poker route. You're not the first person I've heard. I think there's like a legendary 2+2 forum post about Bitcoin. And then also I think it was Seals with Clubs was a platform that used Bitcoin. Anyway, it's an interesting that you see a lot of people enter the crypto space that way, and then sort of come back around to this concept of gaming metaverse uses there. But yeah, I don't know. Anyway, it's just great to hear how you came into the space. Oh, I always love that story for folks.
Yeah, it does seem like it's a common story. I'm not sure what it is, but I think we all have very similar interests anyway when it comes to poker and everything else.
Mhm. All right. And Christoph, yeah, tell us a little about yourself, a little about Scalara, and then what you do there.
Sure. Well, I do not have a poker background, first of all, but I did spend 8 years in TradFi. Maybe there's some similarities. And I worked for an index provider there, something similar to S&P or MSCI for European index provider, developing regular stock market indices that then will be underlyings for ETFs or structured products or for pension plans to track them, and also some equity derivative indices or indices based on options. So that's where I spent most of my time on, and very briefly actually worked on a crypto project trying to build Bitcoin indices, I think starting in 2017 when everybody was trying to do that in TradFi, but then with the bear market, that project kind of got very quiet and only picked up then last year again, actually. Then, yes, while working there, the regulatory burden was actually growing quite quickly. There have been some big scandals in the benchmark space, like the index benchmark space. I think the LIBOR scandal is quite familiar, where people realized how much money is actually tracking such indices and benchmarks, and how careful you have to be about being transparent and rules-based and very clear about the methodology. So I spent more and more time on committees, creating a paper trail, and very little sight on new products. So that I decided last year in September to switch gears, and I joined DeFi Pulse to work on indices in DeFi, to a very small team, which was nice, like reminded me back to my initial TradFi index provider days. And right now I spend my time on a very diverse set because it's a small team, which is including maintenance of indices, but also development of new strategies. So then, yeah, in September, I took the deep dive, tried a ton of protocols, bought my first NFTs, and was really amazed about like the speed, how things change and how new things pop up. I tried out a lot of trial and error, and this huge, like pretty open canvas still in DeFi where people can build new things. So that was very interesting for me. And about Scalara, it's actually just a rebranding from the previous index side of DeFi Pulse. And we're still continue similar to the previous products that people may know, like the DeFi Pulse Index, DPI, and the Fly indices. We continue to try to build indices that provide exposures to certain themes that can be used in investment strategies. So you can have very nice building blocks like DPI or the Flies, like long and short. Yeah.
Awesome. Cool. So we've got the poker out. We've got the wanting to ship indices and get back to rolling up your sleeves route. So yeah, let's dig into NFTX a little bit, Caps, and feel free. I think the way I'd like to do it, maybe one of the most intuitive ways for users is, let's say I have a spare cool cat, or something I know I can and throw into a vault on NFTX. I show up to your website or to your product. What can I do with it, and why would I do that?
Yeah, so I tend to kind of dive too technical at points, so please like pull me back if anything just needs to be elaborated on a bit. But yeah, if we take the case of like a cool cat, for example, and I guess using like the current market volatility as an example, one thing you could do with that cool cat, and I'll try and like maybe start from like a simple thing and then we can like work backwards from there. But one thing you could do with a cool cat on NFTX is to actually just instantly sell your cool cat for like a price that's kind of close to spot, or close to the floor price on OpenSea. So you can just come to NFTX, you can go to the sell page, it'll list all the assets that are available to instantly sell. You'll have a price that's just a market price determined by a Sushi V2, a Uniswap V2 AMM pool. And from there, you can just insta-sell and get your ETH liquidity straight away. So we saw that use case being really, really like well used in the last few days, as people were just kind of, they didn't want to sell on OpenSea because it wasn't even guaranteed that there were going to be any buyers. Even if you undercut the floor price, you wouldn't even necessarily get a buyer. So having NFTX there to just like instantly sell was, I think, a great use case. And the other thing that I think is far more interesting with like, if anyone interested in DeFi, is when someone makes that sell, there's actually a fee that gets taken, which depending on the vault, it can range from like a few percent up to 10%. And that fee then goes to the liquidity providers that are enabling that instant, take on the risk and enabling that instant sell liquidity. So those fees then flow back to these liquidity providers. They generate obviously revenue from that. They get a yield, and what we see is that the volumes and the yield can be significant. That it attracts more liquidity. So more people come in and put their cool cats in and provide liquidity for the cool cat pool, and then therefore there's deeper. So the spreads tighten. So you end up with a price in NFTX that's much closer to the floor, like to the floor on OpenSea or wherever else. And then you see more volume coming, and so this flywheel effect starts to build. So yeah, those are probably two use cases. Like one is instant selling, and the other is actually generating yield from your floor NFTs.
Awesome. And how did you guys first identify that there was a need for that? Is it, you kind of hinted at it with, trying to get close to floor execution on OpenSea hasn't always been easy, right? So there's that. But, what is it? I mean, not to get too on the nose here, but, what is it about bringing DeFi capabilities to NFTs that felt like, it was worth building a protocol around it?
I think when you kind of had the liquidity protocols of like the DeFi world, it's all just incentives. And we kind of knew that like good things would happen if you had like deep liquidity for floor NFT, like for floor collections or floor NFTs within a collection. So our goal was like, how can we get the incentives right so that we can get this deep liquidity and kind of all these other things can happen off the back of that. Prices that are closer to the floor, things like having reliable price oracles so that you can then have an NFTX vault being used in another DeFi application. That's kind of like why, the kind of focus there was on those incentives. So we moved away from that kind of index token idea and kind of started thinking, how can we capture as much floor liquidity as we possibly can? And it's not just liquidity providing that we do. We also, what I think is a really important part of the puzzle, which is inventory providing as well. So we don't only focus on liquidity depth, but we also focus on the idea of like a inventory breadth. So having people stake just their single cat asset will benefit the vault because there's more options to choose from when you come to the vault. Yes, it's not adding liquidity, so it's not as valuable as liquidity providers, but they are actually providing a service by putting up their cat to be purchased or swapped. And so, we had these kind of two mechanisms working in tandem. One is people providing deeper liquidity, and then people also coming in and providing inventory where they don't take the impermanent loss risk. They simply just put their cat into the pool and mint a cool token, stake the cool token, and then they'll also earn part of the yield that's happening in the vault. So we kind of had this mechanism that I think with enough exposure and enough integrations and that kind of thing, we can kind of look to capture a significant chunk of all the floor liquidity for like major collections.
Awesome. And then just going back to incentives, it's the tokens, right? That sort of that tie those different things you can do together, right?
Yeah, like the token, like the underlying vault token, like the cool token, for example.
That's right.
So I should clarify, like all the fees and everything, that's all paid in like fractionalized, in the case of Coolcat, fractionalized cool tokens. So people that are providing inventory, they earn like the actual cool token, so the underlying NFT.
Awesome. And so, look, Christoph, gonna turn to you now, right? Because I think it's it's your part of the story, right? And NFTX has built this platform, have these tokens that kind of make fungible, right? Floor NFT prices or exposure. So what the NFTI obviously makes use of that. But let's take a step back, talk about what NFTI is, the problem it's trying to solve, and then kind of how it uses NFTX tokens.
Sure. Yeah, it's actually pretty good that Caps went through the tokens first, because pretty much the NFTX tokens are necessary to build an index, because they solve the main problem you have, that NFTs, ERC-721s, are not really suitable in DeFi and in all the protocols that you may want to use to create an index token or basket token. So that was the key unlocking building an investable index. So yeah, to get to your question, NFTI, or I guess the Scalara NFT index, is just an index like the S&P 500 index or the DeFi Pulse index. So it's basically a basket of tokens. So you don't have to buy 500 stocks or 15 NFTs or 10 product governance tokens. You just can invest in one token and get exposure to that full basket. So if I had to summarize it, the index provides diversified exposure to blue chip NFT collections, and it utilizes these NFTX tokens to make NFTs investable in DeFi. And what Caps has also hinted to is you actually earn yield in addition. So that's kind of the innovative feature, that the index is, I guess you could say, like a total return index. It's not just the floor price performance that you're tied to, that the index is tied to, but it actually has a yield that is generated by these all these fees on the NFTX platform. The index holds the fee, the inventory staking version of the tokens that Caps had mentioned. I guess they're called the X tokens. And the methodology of the index is, as I said, it's a blue chip index, which means it's supposed to be the largest NFT collections, but it's not just largest, we also want them to be well established. So there's qualitative criteria, making sure that, sometimes after the launch of an NFT, there might be a spike, and doesn't mean it's a large blue chip NFT necessarily. So we also ensure that the NFT has the project has a certain maturity, has been around a while, possibly survived some bear market, and secondly, of course, we have to ensure that it can be investable. So just having an index that cannot be implemented as a token is interesting, but of course would not be helpful for someone who wants to invest in it. So we have to also make sure that there's sufficient underlying liquidity. There isn't anything preventing the index to be tracked and replicated by a token. And I guess to your second part, what you were asking, like, why did we do an NFT index after our previous indices? So the main goal of indices is diversification. So we want to have offer products which are different to each other. So if we just have something which is the same as a previous product or already exists, it's correlated, that's not adding any diversification benefits. So looking at the NFT space, it's quite distinct from a risk and performance perspective, but also from the user base, which is as interesting. So there's, I guess, if I generalize, there's NFT users, ecosystems is a lot more focused on art and culture and hype, a lot less on the technology. So there's a large amount of people that are not familiar with DeFi. And the other way around, there's a lot of people more focused on the technology and economics of DeFi, but maybe not so much of the large amount of capital that's quite, I guess, sitting there, not utilized in the NFT space. So having a product that kind of sits at the intersection of these two spaces, we thought would be very interesting for investors. So that's why we decided to launch this index. But as I said, it's really only enabled us, we were only enabled to do so because there was NFTX. We spent quite some time looking at other protocols trying to fractionalize ERC-721s to make them suitable for DeFi with the same depth of liquidity and the breadth of the offering, like the amount of different collections available. There was really only NFTX.
So, essentially an index of NFTX tokens, but then also NFTX tokens that earn yield. Caps, I know you said, pull you back from being technical, but I mean, I think you did actually cover it briefly, but one of the not intuitive things is maybe the source of the yield, right? Because we talk about yield in DeFi, it has, comes from different places, lending protocols, and incentivization, right? I think the NFTX yield is a little bit different. And again, I know you probably covered this ground, but I actually do want you to double click and talk a little bit about um, sort of where the yield comes from on the NFTX tokens.
Yeah, absolutely. And I think that is an important distinction to make because we don't add any extra incentives to the yield. The yield is purely organic through like the trading activity or the vault actions in each NFTX vault. So yeah, I mean we refer to them as the buys and sells, but under the hood, everything that's happening is users are minting their NFTs into NFTX. So let's say I've got a CryptoPunk and I want to, and it's a floor CryptoPunk, and I rather than holding the 721, I actually would much rather have the ERC20 because I want to, use it in DeFi or stake it in NFTX. So what I do is I take that 721 floor punk, I mint it, or I deposit into NFTX, and I mint a punk token. And then if I want to sell the punk token, I can then take it to Sushi and just instantly sell it. And when I make that mint transaction, that then generates this fee. So I think the mint fee on the punk vault is 5%. So I will mint 0.95 of a punk token, and then I will then the remaining 0.05 then goes to liquidity providers. 80% of that 0.05 goes to liquidity providers, and then the remaining 20% goes to the lower risk taking inventory providers. Yeah, that's kind of like the sell side, like the minting and then selling on Sushi. And then you've also got like the buy side where someone actually buys, in our case, 1.03 punk tokens from Sushi, and then uses those punk tokens to then redeem a CryptoPunk NFT from the NFTX vault. So then we have that side that generates yield or fees for the inventory providers, and we also have instant swaps as well. So if you have a floor CryptoPunk and you want to swap it for another floor CryptoPunk in the NFTX vault, you can just do an instant swap, like no counterparty or anything like that, and pay a fee for that as well. So there's some cool like extra use cases there, and all those fees are the only thing that drives the yield on NFTX. I mean, it's quite amazing, really. Like the Milady vault, for example, I think was at like 1,500%. That might be an exaggeration, but I'm pretty sure it hit four figures. Yeah, for like a good, like I'm sure it was for like 3 or 4 weeks. Like it wasn't like a short-lived thing, and that was all through organic yield.
That's several Miladies a year.
It really is, and some people, like there are like large holders that get in, and they will sort of like basically I call it like self-replicating their NFTs because they go in with these PFPs and they end up with more. And yeah, it's just an awesome thing to be able to enable, really.
Very cool. All right, yeah. So for folks who just joined, and then just maybe as a refresher, DeFi Pulse is hosting this conversation about where DeFi and NFTs meet. We have Caps on from NFTX, a platform to buy, sell, swap, stake, and earn yield on NFTs. Christoph on from Scalara, which is a crypto index publisher that's recently created NFTI, an index of blue chip NFT collections using tokens from the NFTX platform. So yeah, I wanna go maybe more generally to DeFi and NFTs, and actually maybe even a threshold in Caps. I've heard you refer to this as MetaFi. Is that what we're calling the industry for now? Are we sticking with that until we hear something better, or we think that's the one?
I would love a vibe check on this because I've had like different feedback from different people, but
Uh-huh.
I've always just said like DeFi and NFTs, and it's such a mouthful. And then like NFTFi is like maybe like MetaFi seemed like a decent enough like explanation of what things are. So yeah, vibe check would be good.
Okay. I mean, I like writing DeFi handshake NFTs. I like writing like the cross sword emoji as well, but saying it is a worse thing. Well, we'll eventually get there. I mean, I guess my question for MetaFi, which I'm gonna try out, and that's what I'll call it for now. See how it works, and then I'll give you the vibe check afterwards. Where do you think we are for this? I've seen that there are a couple of projects I do still consider at the forefront. Is it early days? Is this a big year for MetaFi? How do you see it? How do you think about it?
Yeah, I think there's two angles here, and I'm going to have like a biased tone on this probably, but there's like the MetaFi, which is like trying to use like ERC-721s, which is like far from a solved problem, because you got things like, trying to value assets at scale, and do it reliably. I know there's lots of projects working on this, but it's not something that can just like happen overnight. And I'm sure eventually it will be solved, and there'll be some amazing things that are built on top. But the kind of, when you think about like MetaFi or using ERC20 assets, then it's early days, but at the same time, it just takes like a very small integration for NFTX ERC20 Punk token to be integrated into any existing app. Like MakerDAO, if they had any interest, could add Punk. It wouldn't be a like tech. Obviously, there's liquidity concerns and everything else, which is probably maybe for our side is kind of the early days stuff. We are in the early days of liquidity. So yeah, I'd say we are like really quite early on. But coming back to the NFTX ERC20s, like if you look at something recent that we did with Putty Finance, we actually through FloorDAO were selling with like Forgotten Runes wizards put options, which we use the ERC20 token. And I think like something like this, that was a really simple setup, because we were using an existing token standard that could be plugged in very easily. But yeah, we had like a very like sophisticated financial product that was created with NFTs underlying the whole thing. And I thought that was like a particularly cool example of how, yes, we're early, but a lot of this is kind of ready to go. We just need to explain it to people and build that liquidity to make it more available and scalable.
Awesome. Yeah, and we've pinned a tweet that references exactly what you're talking about with Puttify. Is that right?
Yeah.
Selling the put options on Forgotten Runes. Christoph, what about you? Where do you think we are with kind of DeFi and NFTs? Sorry, where is MetaFi these days?
I think having the NFTX tokens is like a great starting point for a lot of building on top of them, like NFTI. But there's also other indices or other projects like FloorDAO that are using them. So I think there's a lot of room now to build cool stuff with the NFTX tokens, derivatives. And I mean, I think there's also room even for this. The mechanism right now, I guess, for NFTX kind of limits it to floor NFTs. I'm actually curious, maybe like almost like a question for Caps. Have you thought about how to get a rarity, or how to get non-floor involved somehow? Because I guess there's a huge. Otherwise, you're kind of limited to the whatever percentage is considered, I guess, floor. So
yeah, that's a good question. I think a lot about because I'm sure other stuff can be built. I mean, we can do like eligibilities, so you can segment like a collection into like eligibilities for certain token IDs, or if the metadata is on chain, you can set up certain eligibilities for like certain traits, and then you could build pools. And that's kind of how NFTX started, was trying to do that. And actually, because the liquidity is quite thin, these layers, like it's very hard to do that properly, liquidity. So one other thing we're looking at is like trade ups and trade downs. So pricing higher tier assets in the floor token, which is like something that might be easier to reason about. So like, let's say you've got like, I'm not sure what they're going for at the moment, but rather than pricing an ETH, you could price it at like 2.4 Punk. And then you don't have to think about like the exchange rate of ETH and Punk. You just know that you're pricing at levels above the floor. And like for me, for example, like I would quite like that, because I've got like mid-tier rares that are kind of not that useful, and I'd much rather split them down into floor tokens so I can start earning yield. So it's kind of like a feature, I think, with enough like education, maybe people will start getting more like floor liquidity into NFTX by selling their higher tier assets.
That sounds pretty cool. Yeah, and then I guess, Nathan, to your more general question about MetaFi, I think the DeFi space can learn from the NFT space to, I guess, kind of abstract away a little bit the technology below things, like the many steps of staking, and there's, I guess, not just for this NFT question. Like you need a lot of like different wallets sometimes in bridging. So there's a lot of technology in DeFi that is necessary and that more savvy people are very familiar with. But I think it's a burden of entry for people maybe from the NFTs that are more interested in the culture and art and the status that NFTs bring, and maybe that should be kept in mind for the development of MetaFi to think about the different user bases.
Yeah, that makes a lot of sense, right? There's DeFi culture, people who are attracted to DeFi who came into it through that. There's NFT culture, right? There definitely is some overlap, but there were significantly more people who were brought in through NFTs, kind of starting with the JPEG summer last summer. Caps, I guess sitting where you guys sit, is there tension between, satisfying DeFi degens and being true to folks who just want to show off their JPEGs? Can the cultures learn from each other? Or is that a challenge you guys face at NFTX?
Yeah, maybe similar to what Stefan was saying. I think it's probably, it is a bit of a culture clash. I think the Venn diagram of overlapping people that center bit is pretty small. Whether they can learn from each other, I don't know, like, do we want NFT people like learning to be degenerate, like yield earning people? I'm not sure. And
Sure.
I think on the DeFi side, there's one of the things we're doing at NFTX is like we try to get everything into NFTX, like both the DeFi and like the NFT side, and actually, it does create like awkwardness and difficulties because we're trying to explain to people, you deposit your floor NFT into NFTX and you get a token back. You won't get your NFT back. So if you like your NFT, you shouldn't be using us. Like you should only be thinking of this in like purely financial terms, really.
Mm-hmm.
So there is that like confusion. So we're like looking to split things out, and maybe over time there'll be that sort of education, or just like that kind of curiosity that drives one side to the other. It's definitely a challenge, like for sure.
Awesome. Are there other, and this question for either of you, are there other projects, in MetaFi right now that you find interesting?
Yeah, I guess following up to my previous points, even something as simple as like Gem is pretty interesting, right? It's just a shopping cart or marketplace, but it's kind of, again, it simplifies things. You don't have to know 5 different marketplaces, and instead you have one Amazon or like one shopping window to look at and get the best deal. So I think even something as simple as that is I find is a great tool.
Yeah, that's a really good point.
And for those who don't know, Gem is an aggregator, right? Where you can get execution across platforms. Is that right, Christoph?
Yeah.
Like I think this, something that is probably underrated is like just some of the like just utility apps that come out that are very very powerful, but not like necessarily like an entirely new thing. Like aggregators have been around for a while with DeFi, and Gem have just like created such a great product there. Other than like NFTI and NFTX and some of the cool stuff there, obviously we've got JPEGs, which is kind of 7-1 collateralized lending, and that's a whole like kind of different side to what we're doing at NFTX. And I think the lending markets have just seen enormous volumes. I haven't been that closely following it, so maybe you guys might know a bit more, but I'm pretty sure like TVLs are really exploding in like the borrowing and lending side of NFTs. And then obviously SudoSwap as well, which I'm excited to see. More kind of like low-level liquidity stuff coming out, and improving, just like moving things away from like centralized liquidity and Web2 liquidity into more kind of decentralized stuff. I think will open more doors for composability and everything else. Early days, because I don't think there's a huge number of applications that we can talk about like right now. But I'm sure there are many more being built.
For sure. Okay. Reminder for some folks, but for others who may have trickled in, DeFi Pulse is hosting this conversation about where DeFi's meet. We've got Caps from NFTX and Christoph from Scalara. Taught the platforms, have talked a little bit generally about MetaFi, but maybe to go back to the platforms a little bit, and it's maybe a similar question, but any other use cases for NFTX tokens, kind of other than an index like NFTI that you've seen, Caps?
Yeah, I mean, I mentioned that we're kind of bringing in this idea of pricing higher tier assets, like trading up and trading down. I think it takes you back to the gaming days where you could, like, if you had loads of items, like in Counter-Strike or something, you can trade them up to rarer ones or trade them down. Well, in that instance, you couldn't trade them down, but the idea of trading down higher tier to lower tier is kind of cool. Collateral, like obviously tokens as collateral, we've got a Rari fuse pool, which unfortunately, obviously, Rari's had some difficulties, but there is a Rari fuse pool with ERC20 Punk and Wizard tokens that can be used as collateral. And then again, like the same way with NFTI, where they're using the X tokens, you can use X tokens as collateral as well. So you've got this asset that's actually like increasing in value over time as the trading activity happens in NFTX, and can also be borrowed against without any impermanent loss risk. So yeah, some very cool cases of collateral with NFTX. And yeah, the yield. I mean, we talk about like NFTX vault yield as the kind of main yield, which is typically true because the yields tend to be highest there. But also, obviously, with Putty Finance, there was some yield there selling put options, AMMs as well. Like NFTX is looking to move to Uniswap v3, so we'll have a 1% fee for like just the standard speculation and trading there, as well as opportunities for concentrated liquidity, which will really help tighten spreads and improve the buys and sells on NFTX. And yeah, I think we've got FloorDAO, which is using NFTX and is kind of more of a like coordination tool, because one of the problems with NFTX is trying to get people excited about the yield they can earn. FloorDAO is kind of there coordinating people to kind of demonstrate that yield. And I think in the last 24 hours there was like I think it was, I forget exact number, but it was like we've got something like an $8 million treasury, and there was about 0.15% of yield single day on that 8 million from the volatility, and that's purely through TX trading activity. So definitely some cool things being built on top, and I'm sure there'll be more features to come as well as they appear.
Awesome. Yeah, definitely been following FloorDAO pretty closely. When is the next collection edition built?
I just finished actually this morning, and it was Squiggles took it. So there will now be liquidity being built for Chromie Squiggles from Art Blocks.
Squiggles and a photo finish. Awesome.
Yeah, pretty much. Yeah.
It's also in the index. It's great. It's always nice to see whenever there's volume, you see the index yield picking up, which is like a nice connection.
Yeah, that's awesome. Yeah, we definitely need to talk more as well, because I think we can, with FloorDAO focusing on liquidity for any kind of NFTs in the NFTI index, like that. Yeah, like there's going to be much more use cases there, and yeah, more that can be done, I'm sure.
Got it. I'm gonna have one more question for each of our guests, but if folks have questions from the audience, please request now, and we can bring you on stage after I get through these two last questions. So the last questions are simply where can users or listeners learn more about NFTX? That's first to you, Caps, and then I'll turn to you, Christoph, on NFTI.
Best place is to hop into the NFTX Discord, which is at the footer on the website, but also Javery from the product squad has put together academy.nftx.io, which is like a pretty unabridged kind of overview of everything that you can do with NFTX, and it goes into a lot of detail there, so definitely want to check out. And also nftx.wtf as well. That's another kind of high-level overview.
Yeah, and for Scalara or NFTI, I think there's two spots. Definitely follow us on Twitter for updates on NFTI, but also DPI and Fly in general indices. It's actually we're about to launch a new index, which people might have seen. So definitely follow us on Twitter for updates and news. And then on our website, if you want to actually read the detailed methodology or see what are the current compositions of the indices, you can check out the methodology section. And on the blog section there's also more detailed analysis about the indices, and you can see whenever a new index.
So what do we think of MetaFi as a term?
Yeah, I like it. I mean, so it comes from just metaverse. Is that
Yeah, that's
the
the
root?
idea.
Yeah,
Yeah.
yeah. So I just wonder if there's something that isn't um, super. If not all PFPs end up in the metaverse, it's like are we missing parts of it? But I like it. I mean, it flows better than all the other ones, right? Which might just at the end of the day make the difference.
Yeah, was that what happened with Open DeFi? I think maybe DeFi just flowed a little bit better or something.
Great. Well, look, Caps, definitely appreciate you coming on as well. Enjoyed the conversation, and I learned some things. And we'll obviously we're recording this, and we'll put it out there for folks who couldn't make it live.
Thanks, guys.
Thanks,
Thanks,
guys.
everyone.
Thanks, everyone.
Cheers. Bye.
Bye.
Cheers.